Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
9th of March, warm welcome to the COB. It's a Monday afternoon. I'm Nadine Blaney, and look, it's been a tough day out there. I understand if you're feeling a little bit nervous when you look at the headlines. We'll get you across what you need to know, by the way, in terms of what's moving this market. But yeah, when you see a fall of 3% at one stage of the session, just after lunch, off by 4%, starts to get a bit nerve-wracking. Month to date, and I said we're only 9 days in, we're off by close to 7%. Now I know perspective's everything, and we're just going back to where we were sort of end of December, or November, I should say, 2025, but still, there are a lot of unknowns happening around this unfolding situation in the Middle East, and it really is today impacting sentiment, not only here, but around the region, and we're set up for a pretty darn weak start to not only the European Open, but the US Open as well. So that is a picture of the CBOE Australia Index as we speak. Bonds across the globe are sinking rapidly as that worsening US-Israeli war with Iran pushed oil prices well above the $100 per barrel. In fact, at one point, oil prices were up by about 25% today. The 3-year Aussie government bond yields up around 4.592%. That is the highest level since mid-2021. The South Korean president, for example, has said that authorities will be capping domestic fuel prices for the first time in nearly 30 years to contain a spike in prices there. Airline stocks right around the region have crashed, piling pressures on carriers that were already navigating tight airspace as travelers scramble to evade the Middle East conflict. Hong Kong's Hang Seng hit a 6-month low, and all happening as Iran names Khamenei's hardline son Mojtaba as the new supreme leader of Iran. So really flying in the face of what the US President Donald Trump had said his intended outcome was. So he's a hardliner. He's deep in the system already. He is not any fresh face, you've got to say, coming in as the supreme leader in Iran. So I thought it would be worthwhile today to look in on currencies because we've got US dollar strength. So the US dollar is really proving to be that safe haven. So maintaining that status. But again, we've got complicating the factor, oil price concerns that they'll trip up a very weak global economy, a fragile global economy, I should say, rather than weak, but also that it really complicates the outlook for central banks. And that includes our own RBA. So I had a chat with Tano Pelosi from Ontario's Capital a little bit earlier today. You can go online and find that. And he was saying the RBA must hike rates, not just sometime this year in May. He said, rip the Band-Aid off, do it next week, because if we've already got hikes in the forecast, inflation is a real concern right now. Just do it now, he reckons. We have a ton of content at ausbiz.com.au to help you make sense of really what's going on out there, looking at things through an Australian investor perspective, and perhaps even talking about a few opportunities that might be out there for you still, because of course, if you're set, if you've got a bit of cash, there might be some really great opportunities coming through. I'll chat about that with my guest, all amongst this market mayhem. That definitely did seem to be a bit of panic in the air today as we watch those energy prices soar. As I said, oil hitting near 25% gain today alone. The velocity of the move in oil is what has really caught a lot of people by surprise in the marketplace. And of course, it raises the specter of stagflationary risks. So high inflation, low growth. That's come up a number of times in conversations today. Well, what stands to benefit when oil prices rise exponentially, go parabolic, you could say? The energy stocks. So Woodside, for example, is up by 2.5%, Santos 3%, yen coal. It's really the coal stocks that are the real standout. And our stock of the day there, underperforming those energy names, but outperforming the broader market. Interesting to note that there's been a shift out of gold, and I dare say some of that money has been flowing into oil. Interesting to see these miners getting hit so hard when today we've got the price of iron ore continuing to rise. So if you're looking for, I guess, a little bit of good news out there, we have been watching iron ore go from strength to strength, and part of that is on supply concerns. So we've got tech stocks coming under pressure. Yeah, it is just really live out there. A few corporate stories: Santos and its JV partner Beach Energy proceeding with a project in the Cooper Basin. ProMedicus signing a couple of 5-year contracts worth $40 million US. Nanosonics saying that the US FDA has given it clearance for expanded endoscope processing. Dyno Nobel is selling its Phosphate Hill fertilizer business to Mayfair as it looks to get out of fertilizer altogether. Digico's infrastructure REIT has hit a record low. The CEO has gone on leave 3 months into the job. And Dex's Convenience Retail REIT intends an on-market share buyback. And Magellan Financial has tanked, well, after last week's bumper gains, if you put that in perspective. And Blue Glass has hit a near 2-month high on a U.S. defense contract. So, look, there's a lot to digest. To help me make sense of it all, Kai Chen is joining us from MPC Markets. Kai, welcome. So I didn't want to editorialize too much, but is that the truth? You know, the speed of this oil price rise has come as a shock.
No, absolutely. I think, it's the dynamics in the modern markets. The news is coming out faster, we're processing information faster, and there's also a lot of momentum algos that's automated. So once you start getting these breaks, it definitely goes on a bit of a tear. But I think it was a bit of a surprise how oil opened up this morning.
And so I have to ask, have you been answering phones from concerned clients? Because again, I said, put it in perspective. We're coming back to levels November 2025. So it's not as if, the world is coming to an end in that regard for equities, but is it sort of a whiff, a hint of what could potentially come?
No, absolutely. I think, definitely getting a lot of calls and concerns from investors. But for us at MPC, we're well positioned. We've got a decent amount of cash holdings. We're actually looking on the other side in terms of where the opportunity is. I think in terms of the oil move, it's a really difficult one to get on if you haven't been on it. It's a bit of delayed reaction because you would have thought that it would have had a larger initial reaction last week, but it's really, I think, the open-ended nature of this conflict that's really got the market spoof over the weekend.
Yeah, because the playbook maybe many had been hoping for would be a Venezuela-type playbook. You go in, wrap it up, out of the country, but we've learned in the past week, entering the second week of this conflict, is that it appears as if it's going to be more protracted. There's no real plan to bring it to an end. And the fact that Iran is attacking other Gulf states and their infrastructure has come as perhaps the shock. So do you think that institutional equity investors are also waking up to this reality?
Yes, absolutely. I think there's been a bit of a recalculation because, the US came out and Israel came out with very maximalist goals where they wanted regime change. And they were hoping with the fall of Khamenei, basically that, we'd see a lot more resistance rising up in Iran. But of course, with the appointment of the new supreme leader, it shows that we're still on the same trajectory and there's a lot longer to go. So, the question in the air is, are there going to be boots on the ground? Is this going to be a multi-month, if not years, in terms of in this conflict? It's not sustainable with the fact that if the strait is closed for more than a month, we will see sustained inflationary pressures.
Yeah, because the oil price is the oil price, but it flows into all, sorts of other impacts when it comes to inflation. I was speaking with somebody who lives up, in agriculture. He's a farmer. And talking about some of the other farmers already talking about how difficult it is to get diesel delivered regardless. Not only that, but then if you have fertilizer costs go higher, we will be paying for this at the store, 6 months a year from now. So is that your big concern at MPC, the sort of global impact?
Yes, absolutely. I think, stepping outside the immediate result of the oil spike, I think inflation is the biggest question that everyone has. You're exactly right. A lot of the fertilizer, I think about 30% of the world's urea come from the Middle East. And of course, oil being the transport fuel, it will have a massive impact on inflationary pressures. I think this really puts a bit of pressure on all the central banks to consider rate hikes. I think the longer this conflict goes on, it'll take longer for the supply chain to come back online. So inflation is definitely a threat to the economy.
Okay, so in that environment, we'll lose that. And we're talking about inflationary environment, potentially rising interest rates. Like, where does the smart money go?
Yeah, it's really interesting because I feel precious metals, at the moment, the market is in complete risk off. So in any asset that has risk attached to it, people are trying to reduce their position and ride out what they see in the market at the moment. If it comes to inflation, basically gold, precious metals should do fairly well, but a lot of times it's delayed because it gets caught up in that risk-off sell-off. Utilities companies do fairly well, and insurance companies do fairly well over those time periods. But again, also the other opportunity at the moment is a lot of the tech stocks, because they've been sold off so much relative to the index, they've had already a massive correction. So we do see some opportunities there. However, it's you've got to navigate the tricky situation in terms of where the whole holistic market is going.
Yeah, so let's just specifically go to that tech space because it is still in the process of being sold off.
Yes.
I mean, we're seeing tech still selling off today. So what would be the trigger for you to enter a new position in a tech company when you don't know how far they will fall further? Or do you wait for some sort of a turn?
We saw some green shoots last week. Say, for example, WiseTech came back from the low 40s to about 50s today. Same with Xero and some of the other stocks. So, given how the market has fallen, they've actually performed okay. For us, we have a bit more information in terms of how to see the stocks that will come out stronger. I don't think they will be immune to the market correction. If the market continues to sell off, there will be continued pressures on all stocks. But we're really planning for the turn. So when it comes out of this conflict, or the market has sold off enough where the valuations become very cheap, where do we go?
Yeah, because arguably, and I'm not being flippant about this conflict in the Middle East because it's heartbreaking, it's bad, but arguably the market was already ripe for a correction, and that could be 10 to 15%. So this is kind of maybe just brought it forward?
Absolutely. I think prior to the conflict, it was like, well, what's going to actually stop the market? And I think the reason why it was a bit lagged last week was we've had so many times where the Middle East has come under pressure, but it's actually really come to a kinetic war. So I think this time is a little bit different. Basically it's been, I think it's been quite a while since the Strait of Hormuz has been closed. So this hasn't happened in past conflicts. So I think it does have a bit of implications for the world.
Okay, so just to reiterate, are there any names in particular you're looking at most closely?
Yeah. I think in terms of the tech space, Aussie tech specs specifically, we really like Pro Medicus. I think in terms of the moat that they do have, and obviously the contract wins today, they're a strong company. We really like them.
So you just want them to get a bit cheaper, because
absolutely. And the thing is, like, you don't have to get in all in one go. You can average down as well, and that's the approach that we're taking. So we have still some bullets in the pocket where if it continues to fall, we still have space to kind of average into that price.
Okay. So the Nikkei down by 7%. Again, oil prices really fanning these concerns about economic growth globally. I know that you guys invest overseas. So are you looking less favorably on, say, the US as opposed to Europe? Or how do you change your thinking around this conflict in particular when it comes to global stocks, Kai?
Yeah, I think Europe will be impacted the most in terms of oil supply from oil shock, because basically the Russian oil lines have been cut off to Europe. Middle East was the other source where they were importing oil. It's going to, and the economy wasn't that strong to begin off with. So I think Europe's going to see quite a lot of turbulence. The US is, they're a net exporter of oil, so they are relatively insulated against oil shock. I'm not saying that it won't affect the price, but relative to the rest of the world, they're in a good position. And in Asia, we're seeing large numbers out of Asia, especially in the Korean and in the Japanese market. But you gotta take it into perspective where the KOSPI, the Korean market, such a large composition of the market is Samsung, which is influenced by the memory chip shortage. So it's had an insane spike over the last couple of months. So seeing these 5 to 10% corrections is not out of the norm. Having said that, they are getting hit more relative to the world.
Yeah, and they import energy as well.
Yeah.
So does this do anything to the whole sort of AI narrative? We've done a lot of reading, probably not all from credible sources, but about the petrodollars that are really helping to prop up a lot of the AI thematic in the US as well. I mean, it's a fact, like huge amounts of money go into America, but does it change the narrative around AI at all or not?
It's interesting. I think maybe indirectly in terms of the energy source and commodity prices, because these data centers are massive consumers of energy. If the cost of electricity and another sector that does well is utilities. Basically, if energy stocks and the energy price continues to rise, and that's why we're seeing coal really take off. That's a bit of a question mark because, in order to power all these data centers, it does throw a spanner in the works. I think the underlying technology of AI will still continue on its own trajectory, but the cost is a question mark in the equation.
All right, Kai, a good chat. So what is a parting thought for investors who might be watching us or listening to us today and thinking, ooh, do I hit the sell button?
Yeah, no, absolutely. I think it's a really good time to kind of take account of your portfolio and see, it is going to be a risk-off market where the market is going, anything that has been labelled aggressive growth, they will be hit. It's time to clean up the portfolio a little bit. If you're in the profit, take some profit. But I think it's really actually planning for the move where, in the next month or so, we will see a lot of opportunities because a lot of these stocks will get oversold. And it's actually the opportunities coming out of this turn.
I'm going to end it on that positive note, positive-ish. Kai Chen from NPC Markets, really appreciate your insights today. Thank you. And I did allude to the fact that our stock of the day was Origin Energy. A viewer wrote in to question if this was a potential place that you could hide for a bit of safety. I put that question to Mathan Somasundaram from Deep Data Analytics and Stephen Mabb from Team Invest.
It's a bit like the supermarket of energy, right? They're retail players, they protect their margin, prices go up. When there's volatility in the energy prices, these guys will do quite well. So in that context, I think they do well. You're not getting it cheap, but the yield is pretty good. You're getting, close to 5%. So in that context, when the market starts to worry, bond yields will come off, this will look relatively well supported.
There isn't really, probably much margin or multiple expansion you'd expect at the moment. One other little interesting thing with Origin, I think, is that they've got an investment in Octopus Energy, the UK energy retailer, and there is talk that Octopus and Kraken may be IPO'd at some point, so there might be a little short-term win there at some point in the next year or two if that does come off. I think Origin owns about 23% of Octopus Energy, so potentially you're getting a bit of a free kick there if that IPO happens and that re-rates for them.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring, or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
Welcome back to the COB. Look, let's get across some of the leaders, and they are few and far between today. I think we've got about 9 stocks on the 200 that are in positive territory. You just heard me speaking with my guest Kai Chen about coal stocks, so we still need energy. And if you can't get it from oil or LNG, well, guess what? Karoon Energy is directly linked to the price of oil, so its share price up by about 10%. That was a question on the call today. You might want to check out that episode to hear what Mathan Somasundaram had to say about Karoon. Here are some of the losers. So we've seen a lot of pressure coming through for precious metals, copper in particular. So deep yellow in the uranium space down by 9.3% to $2 per share. Small to mid-cap space, some of the leaders there are Emerson Resources, Strike Energy, Terracom, that's a continuation from last week, and Frontier Digital up by 3 cents to 28 cents per share. On the flip side, though, we still have Bapcor on that list, down by 16%, and Sports Hero off by close to 15% as well. Tonight, we have a Eurogroup meeting. Finance ministers from the Euro area member states will meet along with the ECB president, so looking forward to that. It's a bit of a quieter week for economic data here locally, but we do get the monthly business confidence survey from NAB, the monthly consumer confidence survey from Westpac, and we have a number of companies trading including CSL, Coles, Qantas, Iris, and News Corp. Let's look at these final figures, and it's not a pretty picture with the CIBO Australia Index off by 0.3%. Little bit of life coming into the S&P ASX 200 by the end of the session, so closing down by 2.85%, 8,599. As I look to U.S. futures, still a very negative picture being painted there with NASDAQ E-minis down by more than 2%. S&P 500's looking off by about 2%. Brent crude and, light crude, the price is up still by 24, close to 25% on the day. It's incredible. So Khamenei's hardline son, Mojtaba, has been named the new supreme leader, continuing to send that oil price rocketing. We've got a whole week behind us in this Iran war with the dangers you've got to think for Israel, for the US, and for Iran multiplying really with every minute. So look, we have great content online that will help you make sense of what this conflict may mean for you as an investor here in Australia. Look, we hope you have a good evening, catch up with some of that content, and we'll see you tomorrow morning from 9:45.